Hey everybody, I was thinking about different tools that buyers are using right now in order to get offers accepted and to compete in a market where, well, hey, the inventory is starting to creep up a little bit, so it's still pretty darn competitive, especially at the lower price points. But if we're offering on homes at $500,000, $600,000, $700,000, man, that interest rate can kick our butt on the monthly payment. So what we've been doing is dealing with some programs, usually a temporary buy-down program. So you might watch some other videos that talk about permanent discount points or things like that, and essentially a fee for the rate you can pay for the rate to be lower, which obviously will end up lowering your monthly payment. But what we found is in a market where a lot of people are expecting over the next 2 years for the rates to come down, it doesn't make sense to pay $1,000 for a rate if it's only going to save you $10 a month. Now that's a little bit exaggerated, but it's somewhere close to that. It might be the break-even point. If I save that money myself, it's going to end up being about 4 or 5 years. So what a lot of people are doing is, in order to control their budget, they're getting sellers to pay for temporary buy-down programs, which essentially are making their payments lower. So it's temporarily reducing their interest rate. It's not a variable rate. So I'll just give you an example to explain how this works. Let's say you have a 1-1-1 buy down, okay? And let's say, just for kicks and giggles, the interest rate is 7%. If you're using a 1-1-1 buy down, the interest rate in year 1 is reduced by 1%. In year 2, it's reduced by 1%. In year 3, it's reduced by 1%. And then at the end, it ends up going back to that 7. So you're looking at a payment that's based on 6%, 6%, 6%, 7. That can be a really big deal, especially if the market is dictating that the prices are starting to even out. It's given people a lot of opportunity to get payments where they want. One of the really unique things about these buy-down programs is, let's say that the rates drop a ton in a year and we decide it's time to refinance. If you refinance after a year and you have a 1-1-1 buy-down, after year 1, you'll get to keep all the money that was paid by the seller for year 2 and year 3, which potentially can reduce any sort of closing costs or cover all the closing costs that you're going to pay for a refinance. So essentially what sellers are doing is they're helping you get payments where you want them in order for you to buy the house close to a price that they want, and they potentially are helping you refinance to get those payments down permanently in the future. So if you have any questions about that, that's one of the unique things we're doing. It helped about 150 families last year, and about 50 of them used that temporary buy-down program. So just wanted to share. Thanks.